So what's in an income statement? What does it tell you? How would you explain an income statement to your grandmother? Fundamentally, the income statement has only got 2 items in it. Only 2 items. And the accountants call it revenue and expenditure. It is only those 2 items. If anyone can show me anything in the income statement which isn't revenue, which isn't expenditure, I'll buy you an adult beverage. Now, what is revenue? Revenue is basically the sales of the company. So if I was running a company that sold bottles of water, and I sold each bottle of water for $1, and for the year I managed to sell 10 million bottles, my revenue would effectively be $10 million. So another term we use for revenue is income. It's income. What is expenditure? Expenditure is all the costs that were incurred in running the business. So the first big cost I would incur as a business that's selling bottles of water is the cost of buying that water from the supplier. The accountants will give that a fancy term like cost of goods sold or cost of sales in the income statement. And frequently we relate to expenditure as expenses. We call it expenses. So all your income statement contains is revenue and expenditure. Or, how I would say to my grandmother, income and expenses. Income and expenses. That's it. That's all that's sitting in an income statement. And your income will be all the things you sell. Your expenditures will be all your expenses, some examples of which may be your rental, the salaries you pay, marketing and advertising costs, training costs. You might have websites, social media and related costs, telephone and data costs, blah, blah, fish paste. All these are simply examples of expenditures or expenses that will be reflected in an income statement. So emphasis again, all that's sitting in an income statement is a reflection of the revenues and the expenditure or expenses for a company in that particular year. So if that company has got revenue or income of $10 million and the total expenditure or expenses of $4 million, that business has generated a profit of $6 million. The revenue exceeds the expenditure. If the revenues are $10 million and the expenditures are $12 million, that business has generated a loss of $2 million. The expenses exceed the revenue. Now, us accountants try to confuse you a bit. So I'll give an example. What's the difference between an income statement, and a profit and loss statement? What's the difference? Fresca! Nothing! Nothing! Absolutely nothing. But in the past, back when I was a youngster, we used to call it a profit and loss statement, but we changed the terminology to an income statement. Second question, what's the difference between an income statement and a statement of financial performance? Now that's a tough one. Nothing! Again, exactly the same thing, but different terminology. Don't get bogged down by the terminology these accountants use. Last question. What's the difference between an income statement and a statement of comprehensive income? Now here there is a small difference. So the statement of comprehensive income shows all the things that are in an income statement, but in addition, the statement of comprehensive income shows you other things that do not relate to core operational performance. Let me give an example. If there is a pension fund and there is a surplus or deficit on the pension fund, that will be shown on the statement of comprehensive income, not in the income statement. If there are certain foreign exchange gains and losses that aren't operational in nature, if there are revaluations of assets, those go into the statement of comprehensive income, not into your income statement. There are none core. In this module, we are going to focus on the income statement. That is simply revenue and expenditure, or another way to put it, income and expenses.